We have so much to talk about today. So much, in fact, that I actually had to make a whole crazy list. But it's all inspired by this one article from CNBC that stood out to me that I want to get into. But I'll just go through everything piecemeal. There's a lot to get to. Let's keep rolling. From CNBC, as gold nears $3,000, here's how its surge compares to Bitcoin and the stock market. And the title of the article, you probably can guess what it's going to say. But yes, gold has outperformed. Physical gold, the actual metal, has outperformed just about any other investment. Even gold prices itself, which it's not like a stock. Gold is a commodity, so it's going to move a lot slower. The whole world is involved with it, so it doesn't move really quickly always. But it's already up 25% this year. And if you go back to when we started talking about it, it's up over $1,000 an ounce. More to come. I'm going to be putting together a video even before it hits 3,000 because it's going to be called $3,000 gold because that's going to happen. I'll film it first and I'll release it right when we hit 3,000. And please give this video a like. It really helps us and we appreciate if you would do that. It helps spread our message to a lot of people that are going to need this because we are right at the turning of the tide. My economic pivot video is so prescient and you need to watch it because this is what's going to happen right now as we come out of the uncertainty. The uncertainty is kind of keeping all of investments and all of the markets, the indexes in a holding pattern for now right now because no one really understands what's going to be happening next. Maybe by design, but that's the situation. But by way of comparison, here's a chart of gold prices in 2025 and here's a chart of Bitcoin in comparison. And here's a chart of the S&P 500 in comparison. And we're going to talk about all the markets in this video. I want to show you a couple of things on the charts that stood out to me that might be relevant to you. And you tell me for the rest of 2025 what you think is going to be the best performing stock from today until the end of the year. Is it going to be cryptos? Is it going to be precious metals miners? Is it going to be the overall indexes? And you guys know that I'll talk about a lot of the stocks that I like that are in the gold mining industry specifically. And I'm not a gold mining specialist. I talk about gold right now because that's the play. And when it's the technology they want to get into, I talk about that. When I'm talking about the market's doing well and finding these high quality, low price stock picks, that's what I'm going to tell you at the time. If it's a time to buy rendering plants and casket makers, I'll tell you that. That's what's in the newsletter. But right now the play is gold mining stocks. And I mention Newmont Mining sometimes, and I own shares in that. I mention it just for an example, because Newmont Mining is the world's biggest gold producer. I'm just showing it as an example. The entire sector, the entire industry will travel like a flock of birds. It will all increase or decrease together. So I mentioned Newmont Mining just to give an example. But I wanted to say about that, listen to this. On February 20th, they're going to be releasing their fourth quarter results. Newmont Corporation is expected to report earnings on February 20th, 2025, after the markets close. According to Zacks Investment Research, based on 5 analysts' forecasts, the consensus EPS forecast for the quarter is 95 cents. The reported EPS for the same quarter last year, and listen, this is the point of why I'm telling you this, last year, the same quarter, the EPS, earnings per share, was 5 cents. Now they're expecting 95 cents. That's what, 19 times greater? And this is what I'm talking about. And I'm using Newmont as an example to demonstrate how this is going to happen with a lot of companies. I'm telling you the profit margins are going to explode. This is an example of that. This profit margin is going to explode. And that's just the estimates. They are already seeing the share price go up a lot because the estimates are expected. People usually trade ahead of time to try and get ahead of what they think is going to happen. So if they come out with earnings of 90 cents, that will actually see the share prices come down likely. But if they beat expectations, then the share price will go up even higher. But the point is these companies are making so much more money and a higher base for the commodities that they sell. Not just gold, but even Newmont. Any company selling copper, silver, everything that they find. But I will tell you, if you really want to make good on profiting from gold mining stocks, the thing is, the bigger something is, the more energy it takes to move it. So if I'm talking about Barrick Gold or Newmont Mining, that's a massive Goliath. It takes a lot to move the shares of those stocks. Whereas a smaller gold mining company that I'm talking about, such as some of the ones that I've mentioned to you in the newsletter, those are smaller companies and they're just going to really explode in price by a lot more than you're going to see with Newmont Mining or Barrick Gold. And that is leading me into the report that I'm releasing very soon about all my top favorite gold mining companies that we've been talking about, the ones that are especially in a really good, attractive price point right now. And as you can see, I'm back from the mean streets of Detroit, and I'm in the studio, so I'm really rolling here. I can do a lot more analysis and work here. And even after this video, for newsletter subscribers, we've got an update, and we've got another stock pick coming up next week, and we're going to put out the report probably this weekend about all of these gold mining companies that are, and silver mining companies that are in absolutely attractive valuations. And I always say, you haven't missed the boat. This is the beginning. The boat is just unhooking its ropes from the dock. Get on the boat, man, it's going. And people think that gold is slow or boring, but this will be one of the most profitable and impressive increases in share prices of anything. The best play right now, it's not cryptocurrencies, it's not real estate, it's not other things like the Magnificent Seven stocks. Right now, and I'll show you on the charts why I'm saying that too, but right now, some of these small gold mining companies that are financially strong and operating in the right locations, friendly locations with paved roads and an experienced workforce and access to the ocean to send all the gold to where it's all going to China. From North America, all the gold's going to China. From anywhere in the world, all the gold's going to China, India, Russia, all the BRICS nations. They're buying up gold to the tune of what I would describe as gluttonous. Now, I've shown you this so many times and I've talked about it for so long that I'm not even going to get into the actual statistics because it's irrelevant. They're just buying every single ounce of gold that they can. That's going to continue to push up the prices. And silver will do well too, and as a hybrid, it's being used up more for industrial uses, so taken off of the market. You don't get rid of gold as much. You store gold, you hoard gold. And yes, the central banks are the largest buyers of gold. The central banks are always the largest buyers of gold. That's not a revelation. That's been the case since the formation of the first central bank. Nation states have a lot more money to save and preserve, so they buy gold. But when something's bigger, it takes a lot more energy to move it. That's why you'll profit the most by getting involved. These smaller gold mining companies that are in the right spot right now. And I can't even believe that these gold mining companies haven't already soared more than they have, even though they're beginning to now. That is a complete detachment from reality. But as we're blowing up this massive speculative bubble where everybody thinks that the way to make money is to buy the high-flying thing you saw on the news the other day, this world is going to be reverting back to reality. That's what I've been talking about for a long time. This is all a bubble that everybody's riding on and just talking about how they know what they're doing because the bubble has done nothing except inflate. I want to see how we're doing a couple of months after the bubble starts popping. And I want to remind you too of my video about the 1929 stock market crash. They were in the crash for months before they recognized that the crash had begun. That will be the same this time. You might have been told that stock market crashes happen really fast in a day or 2 days. Sometimes there's a movement really quickly of stock prices, but the actual overall crash takes weeks and months. And often you're in it for months before you even realize. So based on the article about the best performing asset class in 2025, which is gold, here's a chart of Bitcoin, here's a chart of the S&P 500, and here's a chart of a couple other of the cryptocurrencies that have been in the news lately or in people's tongues. XRP, for example, everybody and their grandma's talking about it to me, and I made this warning video. Here's a chart, here's where I made the warning video, and you can see what happened. Because if you saw the video, if you want, I'll put a link to it below. The reason I said to step out of this one is because of everybody's talking to me about it. A lot of people all at once. Everybody's talking about XRP for some reason. But they can never explain to me the actual underlying fundamentals of the actual investment. I asked a few people, why are you going to buy that? What do you like about it? Because it keeps going up. It was literally word for word what some of them said to me. And you guys know the Haktua girl.
One move in bed that makes a man go crazy every time.
Oh, you gotta give him that hawk to and spit on that thing. You get me?
Here's the Haktua meme coin, a chart of it. And just for comparison, I'll show you the Melania coin, how it's doing too. A little bit better than the Haktua girl. And I want to mention too about oil prices, because if you've been with me for any amount of time, you've been around, you know that I've been going on and on about the oil spike and fade. That is now converting. I'm changing to the oil fade. That's all it is now. There's no more oil spike and fade. That was a time where there's a lot of macroeconomic events, mostly related to war, mostly related to the Middle East, and some of it obviously with Russia too. But now it's just about oil prices fading. The economy is slowing down worldwide, less demand for oil. There's a lot of vested interests that can control oil prices, such as the OPEC cartel. And you'll see oil prices spike a couple bucks in a day if there's a surprise of inventories or a surprise on some other level, or there's a surprise on production levels. But that's all temporary and you'll have a little bit of volatility from day to day. But overall, oil prices are being pulled lower because there's way too much oil. It's the second most popular liquid on the earth. And what else is happening at the same time, which will even make it fade faster? This American debt bomb that I have been talking to you guys ad nauseum about is now starting to show signs of breaking apart, of cracking. And everybody knew that debt was a problem, but now it's actually becoming an actual thing that people are recognizing and being affected by. And I'm not talking about in America, I'm talking about worldwide. The debt bomb in America is being clearly seen and reacted to by other nations. But also, there's debt bombs all over the world. We're at a point where the only way we can afford to pay the carrying costs on the debt is if we lower interest rates, which is only going to be worse for the coming inflationary storm, because inflation's come down, but now it's going to be going higher again. For some reasons of the just natural cadence of the economy where it's going right now, but also by specific decisions and actions that are being taken. And those are artificial actions. Anything artificial is temporary. It'll be temporary, sure, but it's going to stoke inflation now. If you don't have a lot of the lower priced workers that are willing to work for very low wages, if they're all gone, and I'm not making a kind of political statement here. I actually agree with half of this stuff. If there's not a lot of lower priced workers, then the companies that would benefit from lower priced workers are going to be having to either pay more for their workers, pay more to keep the workers that they have, the workforce, or they'll just have to produce less. Either way, all of that is part of a big recipe for inflation. And when inflation starts going higher, that's really good for gold. So if you've been thinking you're missing the boat on gold, we're just getting warmed up here. We're going to have a lot of fun throughout the rest of this year. It's going to be all about the gold mining stocks, and all the while, the backdrop will be rising gold prices, regardless of what the stocks do. If there's a stock market crash, gold mining stocks will come down, likely, but that'll happen even when gold prices are going higher. Stocks all get thrown out with the bathwater. Babies thrown out with the bathwater. So at first, there will be a lot of weakness in stocks if there's a significant crash. And if there's a significant crash, gold mining stocks will be among the first to recover, and they will recover the strongest. But there's a chance, and as has been seen in the past several times, when stocks are coming down or when a recession, that the gold mining companies do just fine. And I showed you that in the last video. And something that you guys don't know about me, when I'm here doing my research, I actually use the Peter Leeds app a lot of the time. If someone asks about a stock and I say, that sounds kind of familiar, I think we maybe profiled that stock. We do hundreds a year. We've talked about stocks for decades. I don't remember all of them. But a lot of times people ask about a stock, and I'll check the app and say, have we ever talked about that stock? And you can see whether or not we have. The Peter Leeds app is one of the coolest things going, and it comes free if you're a newsletter subscriber. Normally it's $20 a month, but you get what you pay for. Here's a chart of the Dow Jones Industrial Average, and when I looked at this, the first thing I said is that a double top? And it's not like looking at a stock. Looking at a stock, you can easily pick out a double top, double bottom, whatever, but an index is different because it's more of a culmination of all of the stocks, but you can still have a double top kind of pattern. Whereas the NASDAQ, I started seeing lower highs, but it did not have lower lows. So therefore, it's not a downtrend. It's just a market looking for direction. There's a lot of stocks right now that are all looking for direction. They don't know where they're supposed to be headed. And so many things are moving right now all at once, especially related to the presidency. And so much uncertainty, which is tough for stocks. No one's really seemed to have a clear idea of which direction things are going to go. But on the S&P 500, you see this down day here. It opened there and it closed there. Then the next 3 or 4 days after that have all been within that range. Now watch that range, and when it breaks out, if it breaks out to the upside or to the downside, that's going to tell you where there's going to go for the next week after that. Maybe a couple of weeks. And when I looked at the chart of the Russell 2000, to me, it just feels like it's breaking apart. It's not really showing any clear technical indicators or setups or anything like that. The Russell 2000 is just also looking for direction, but partly just flailing more than anything. It's not seeking direction, it just has no direction. And once it has that direction that's clear, that means that the probability is that it will continue in that direction pretty strongly. So if it starts breaking out higher, then expect even higher prices. If it starts breaking out lower, same thing to the downside. And this is some of the stuff I'm going to talk about in the Peter Leeds letter that comes out in the first and third week of every month for insiders only. The exclusive is what I'm going to do every first week and third week of every month. I'm going to give you an opinion and outlook on everything from real estate to cryptocurrencies, my opinions on macroeconomic events, what's happening with the stock market. It'll just be an overview of everything. Whereas if you want the actual stock picks where you can put in a few $100, take out a few thousand, the reason that our newsletter is world famous and we've been able to do this for almost 30 years straight now, that newsletter is what you want if you're trying to really take action and invest in some of these companies. And we've got some tremendous videos coming up, so I hope that you're going to subscribe to this channel. We're trying to help you out. Even if you don't want to buy anything, then just get it for free. I don't mind.